Good afternoon. Welcome to Daily Currency Update from the Currency Desk. On Tuesday, on the trading session, we had a slight depreciation in the value of Indian rupee against the US dollar. This was mainly because of the deteriorating global sentiments, wherein we witnessed the euro also falling against the US dollar as well as the Indian rupee. Right now, the only reason why the Indian rupee is holding strong against the US dollar is due to the fact that the government has promised to implement certain reforms which may or may not be pulled out. So right now the expectation is that those reforms would get implemented and the government could sustain them. So all in all, this is the only positive for the Indian rupee, which is currently holding the value of Indian rupee. But on the negative side, we have some negative scenario from the Eurozone, negative news from the Eurozone, as well as we have recently seen that Washington has tightened the sanctions on Iran. So again, this would impact the oil supply, crude oil supply, and just based on this news, we have witnessed the crude oil rally to $110. So this could again put in some pressure on the value of Indian rupee against the US dollar. And since this is near the month end, so the oil importers might enter the market with some dollar buying. Right now, rupee is just holding above the 200-day moving average of 53.13. So as long as it is sustained above 53.13, we could see a rally up till the next resistance, that is 53.62. Currently, we recommend a sell on rise in terms of the Indian rupee against the US dollar with a near-term target of around 53. Coming to the Eurozone, the euro is currently weakening against the US dollar. It has also broken the 1.29 level against the US dollar. This was also partly an impact of the rise in the US consumer confidence data, which helped the dollar strengthen against the global currencies. Yesterday we had one more breaking news, that is the German Bundesbank has approached the European Court of Justice for a case against the ECB, claiming that the current bailout and other policies implemented by the ECB does not come under the purview of the ECB. So again, as we had witnessed a major rally in the euro on the basis of the bond buying program being announced by the ECB, this rally could again be discounted from the euro rate. So we could if the court case continues and we have some negative decisions coming in, we could well see the impact of the euro ECB bond buyback plan being evaporated from the market, and we could witness a downside of around 200 to 300 points from here in. So in the near term, fundamentally we can target a level of 1.25 in the euro against the US dollar. So this means that against the Indian rupee as well, the euro could fall in value, and technically the near term strong resistance seems to be around 69.31. So one can very well initiate a fresh shot at current levels with a stop loss of 69.31 in the spot. Also coming to the pound, the UK currency, that is the pound, was one of the major beneficiary of the euro currency fall. So what has happened recently is that pound has gained a semi safe haven status. This is because it is one of the safest countries or economy in the eurozone. So right now everyone, once they sell euro or remove their money from euro, seem to be investing in the pound, and this is the reason why it is trading at near highs of 1.63 levels. But if we have certain negative macroeconomic data from the UK front, then we could very well see the pound move down up till 1.61 or even 1.60. Right now, in terms of the Japanese yen, we had a strong increase in the value of Japanese yen because of the negative news circulating in the global economic sentiments, which supported the low risk value of Japanese yen. But again, what capped the gains in the Japanese yen was the US consumer confidence data. So all in all, in the near term, it could move up till 77 against the US dollar. In terms of Japanese yen against the Indian rupee, the current trend is also sell on rise, and right now the selling can be done with a stop loss of 68.96 in the spot levels. In terms of Great Britain pound, we have a hold short at current levels, as the rally in the international price of pound against the US dollar is unpredictable and right now gaining a lot of momentum. So we would recommend hold short positions with a stop loss of 87.02 in the spot. All in all, the near term macroeconomic data would be crucial for all the currencies. Thank you.